Hi, I'm Milton Rendell and welcome to Real News Friday. Another busy week. In fact, we're up about 18% in terms of volumes of sales up to the end of, till the 6th of February. The sales number 1160 from information coming from Real Estate Institute of West Australia. House sales during that period were up 16%, units were up 17%, land's 33%. So it's that's probably where part of that blowout is obviously the land sales. They seem to boost in every now and then, so let's keep an eye on that one. In terms of stock, we've now gone under the 8,000 mark, which I've said to you previously has been sort of the benchmark for us in terms of knowing where we're at. So the stock levels are down 2%. That's about 1% lower than it was a month ago and 4% lower than a year ago. So our stock levels have sort of been in and around this sort of 8,000 mark, so that seems to where we maintain. Rentals, interesting, that was up last week by 14%, 723, but we were expecting that in any case coming out of the New Year period. Amount of stock on the market, 2,358, still down 12% on what it was a year ago and even to what it was probably about a month ago. So the market continues to do what it's doing. In terms of where we're seeing capital growth, there's lots of different reports now coming out. The Commonwealth Bank's released reports, National Australia have released reports. Perth and Melbourne were sort of lagging in terms of growth to the rest of the country, but Brisbane, Sydney and Hobart have been leading the way in the last 12 months. So they've had a lot greater growth than we have, but we'll see where it leads in 2022. Now, in the reports I've read recently and listened to from the Commonwealth Bank, they're still forecasting growth in 2022 for our market, or the Australian market, so we're going to be careful what things we digest, but they are talking about a flattening in 2023. And in fact, National Australia Bank are forecasting a small dip in 2023. Now, I question whether that'll occur because I think WA's trend will be different because we are lagging in terms of how we've dealt with COVID, and there may be a lot of different impacts and whether we have a flow of people coming to our state, etc. So there's still a lot of question marks in terms of whether I would be considering that we'll take a dip in 2023. I think the latter part of it may slow or even to the middle of that, but I can't imagine taking a dip. So I think that's a statistic I'll watch fairly carefully, but they are still saying during 2022 we'll see some growth. Now, the other conversations that I've had with a number of people in recent times, and I agree with, is that we have seen growth, and people go, "Wow, this is doing that," etc., etc. But really, we are catching up on what we previously were. So rents are still catching up to where they previously were in 2014, 2015. Some are still behind that period, and so some of the prices. So we will get suburbs that do have kicks. There's no doubt about that, the more popular suburbs, but the sort of particularly through the Eastern Corridor and things like that, we're still catching up. And I think that trend will continue for 2022. But what it is doing is putting equity back into people's portfolios, and now we're starting to get some of the investors deciding to liquidate their portfolios, which is great. The only problem is that owner-occupiers have been buying them, so the investors still aren't probably getting as many into this local area as we would like. Having said that, I was speaking to an agency down in Mandurah, and they're absolutely flying down there. There's a lot of eastern states investment down there, but you also got to remember that Mandurah really pretty was gutted in terms of value probably 3 years ago. It got very, very cheap down there. People were taking substantial losses, and there's still, people are saying it still is an investment area. I think it's certainly a seasonal area, but it doesn't mean it's doesn't mean it's not a good place to invest, but you've also got to be aware of the risk, as it does appear to have a more volatile market than possibly we do, say, in and around the Midland area. But overall, we're seeing still some pretty positive trends. In business, I'm hearing various stories. I know local cafes and takeaways and all the rest have had a real kick in the guts in the last couple of weeks. And people would have also noticed that through the shopping centre since the most recent announcement by our state government in terms of COVID. I think without the deadline, we're going to struggle to determine which direction we really want to go. But hopefully that'll correct itself in the coming weeks. But having this chat to a couple of other businesses. I was listening to someone the other day who has to bring some materials, raw materials, over from Indonesia. He's saying that the import, or not so much the transport costs for a container which they were previously paying for 2 years ago, 18 months ago, we were paying about $2,500 a container. Now paying $10,000 a container. So some of the transport costs are going through the roof, and that's going to flow through in our economy. The other part that I'm also hearing, particularly to do in the building industry, the suppliers to the building industry have lots of orders, but what they're doing is they've been trying to get the stock in, but the builders aren't keeping pace to where they are. So speaking to one tile company in particular, they are saying instead of what they traditionally would do is hold 6 months of stock for a builder, now they're holding 2 years because it's a real drip feed. So that's going to affect our marketplace. The other one I'm also hearing is that the builders are struggling to find trades, and this is exactly what happened to us previously with mining. It is draining our trades, and they're certainly going up north for the quick buck, and I think we'll see that impact. So those who are talking about real estate prices maybe declining in 2023, I can't see it, because the replacement cost to build properties will only continue to go up because of the labour shortage and obviously the stock shortages. In other words, we're going to have inflation in terms of what it's going to cost to build a home, and that's going to be one through material and second through labour costs. So I think we'll still continue into 2023. That's my theory, into still seeing steady increases in pricing. But I'm just Milton from Midland, but I'm just observing what I see in my marketplace, and I try and share that with you regularly. Anyway, all the best. Check out realestateplus.com, and I'll catch up with you next week. All the best.